I already informed you that I am coming to Dubai and Abu Dhabi in the first week of October. Our meeting in Abu Dhabi is on the 5th of October. Those desires of meeting me in Abu Dhabi on 5th of October may contact the WhatsApp number and the email ID given below. In case you have not already done so, kindly do so at the earliest. There are limited seats.
Hi everyone, welcome back to Be Rich. Today I want to talk about something someone forwarded it to me on Instagram, something called comparing charges, and then the Indian market versus American market. So it says basically in the Indian market we have brokerage, we have STT, stamp duty, clearance charge, SEBI charges, exchange transaction fee, GST plus annual maintenance charges. While in the American market, there's only brokerage and exchange charges. That in the Indian market, apart from brokerage fees, the investor has to incur all these additional costs, several additional costs, which is the security transaction tax, stamp duty, clearance charges, and the different various other things. Then in the US, in contrast, typically only involves broker fees and exchange, and making it much simpler, often lower compared to Indian markets. So the argument being, why is this like this in India, where we always argue about active funds and passive funds, and that in India there are so many additional costs. So for the same rupee or dollar in the US, you stand to gain a lot more because simply there's not so much of additional charges put on you as an investor in the American market. True, it is a valid argument, but there are some key considerations which I want you to keep in mind. Things why it's not just simply as charges. Yes, charges are important, but also growth potential and volatility is something also to take into consideration. So US market generally is less volatile compared to the Indian market because American market is very large and is very diverse compared to the Indian market. And the Indian market offers something that American market doesn't have. That is, the Indian market is not a developing market. Here growth is not at small increments. Here growth can happen in large increments because we are a developing economy. Developing economy in the sense that there's a lot more potential in the Indian market. There are huge segments of ideas which have not been brought into the Indian public or to the Indian market. So there's lots of consumers available here which have lots of disposable income. So your products and solutions have a much larger market. Indian population size is the largest in the world now. We've overtaken China. And the American population is far less compared to us. And our middle class itself in our population is almost a complete population of the United States. So if you look at it in that sense, if you're a business, offering a product or a service, and you're looking to tap into a market, Indian customers base is far larger just in terms of sheer size. That is a very important thing to keep in mind. So that is why there is what you say is true. But what your $1 can earn for you in India will be much larger compared to what $1 can earn for you in the US because of the simple potential here. The converse is also true, meaning if some kind of market turbulence is there, some kind of macroeconomic conditions are there, your movement downward is also far larger in India compared to what is happening in the US. The other thing which is important to take into consideration is currency conversion. Here, sitting in India, if you want to invest in the American market, you have to convert your rupees to dollars and then buy American securities. And when you sell it, you'll have to bring it back to India, convert it back to rupees and bring it to India. When you're going in this direction, it always looks favorable because the rupee is always depreciating against the dollar. When I was in school, we used to be at 38, 36, 37. 40 was considered like a huge, oh my God, moment. Now we are well past all that and we are in the 80s and heading towards the 90s. So that's where it will always be heading. So if you keep in long term, let's say you take from Indian rupees, you convert it to a dollar today, take 83 rupees and convert it to a dollar and you invested it and you left that $1 in the US for let's say 10 years and you're bringing it back to India. If that $1 has just become over 10 years, has become $3, because of the sheer degradation of the Indian rupee, your asset class would have grown substantially more. True. But when you compare inflation and other things in India with the US, maybe that growth won't be so great. So these are the kind of complex calculations you have to keep in mind when you invest this way. Now let's talk about investing it in reverse. If you come to India, take your American dollar, convert it to rupees and put it here. Yes, we know what you say is true. We are a developing country, developing economy. There's a chance for huge growth. Same thing in converse is true. When you take it back to dollars, because of the conversion, you tend to lose because the Indian rupee keeps depreciating. Though that 100 rupees you have put here has become 200 rupees, 300 rupees. By the time you take it back, if it's been 10 years' time, as a value investor, you tend to lose. So these are the currency things to keep in mind when I'm saying when you look at it. So these are the things to keep in mind when you see these kinds of posts. Yes, there are opportunities in the US. There are opportunities in India. India has multiple charges, true. US doesn't have those kind of charges, true. But end of the day, it's not the charges which we want to focus on. We want to focus on the business we're investing into. Is the price of value? What is the business which we're thinking of being part of? And after we look at it, we look at the balance sheet and we see what is the intrinsic value of the company. Then we study and see if the market is pricing this company in the correct price. We see the potential, the moat, and the gap which is there for this to grow. And if it's there, and we believe in it, and we believe in the business, and it's in our circle of competence, and we feel safe and secure in it, and we're willing to take the risk, then you invest. Regardless of this being in India, or it being in the US, or it being in Japan, your idea should be sound, that you're investing in a business and you're not looking at trading and commodity and currency exchanges, and all this should not really matter because you're investing in a business. And as long as the business is good and it's secure and it makes sense to you, you should be investing. That's one of the main reasons I'm reading this book. The last book which I read was about Jamshedji Tata. This is the next book which I'm reading, which talks about this kind of a concept, that what is small giants? Small giants is the idea that every business comes into a crossroad where it has an opportunity to grow and expand and become bigger. But some businesses, they decide, no, we don't want to grow and become big and lose control over our ethos, what we believed in, what we started the business for. We don't want to dilute that, get into this game of investors and, profits and margins and getting chokehold into this Mr. Markets mania, that we rather stay small, but we remain giants in our area. So that is the idea. So why am I talking about that? I would rather invest in a business which is of that sort, of that nature, where they have a set of principles which they started off with when they started their business, and they stay true to that. And I would like to partner with businesses like that, because then I know they will always be true to their initial idea of starting a business, whatever that may be it giving a service, be it giving a product or a solution. So that way it holds its intrinsic value, and through the thick and thin, because markets can change, situations can change, recessions can come and go, but the basic principle behind the business, what the owners thought of, stays intact. And that way I have something to hold on as an anchor, as an investor, when I'm looking at it. So don't get fixated on all this, Indian market, US market. Look for value. And the last caveat which I want to give is, if you're sitting here in India and you're keen on investing in American markets, wait. First, start investing in India. Okay? Learn, like they famously say, learn to drive here in India. Once you know driving in India, you can drive anywhere. Same is true with investing. Stay in India. Know about Indian companies. These companies are bread and butter here for us. All the news is available. And if you're able to analyze this and understand this and invest and make good on your investments, then you can look at expanding your horizons and going to the US. In the US, like I said in the beginning of the video, the market is much larger. It's very diversified. We all know the big brands. We know the Apples, we know the McDonald's, we know the Intel, we know Microsoft, we know Tesla. But there are thousands and thousands of great companies in the US where you do not even know they exist till you start looking into their stock market. But then lies the problem. Because if you dive into that, how are you going to research these companies and find out if they're at value? So that is why I'm saying it's better to first practice here in India, learn and get a grip on it. Once you have got into a position of strength here, then you can use that as a base and launch yourself into investing into other markets. This is only true for people sitting in India like me, who are very keen on looking at abroad, because of all the FOMO we seem to be suffering. So don't suffer that FOMO. Focus on what you have. If you're fortunate enough to be working abroad, let's say in Europe, in the Middle East, and you have access to those markets easily, then definitely do look at investing in those markets from the get-go. You don't have to just look at India and rely on India first. This is basically for people who are very small, like me, sitting here in India, who would also want to think of going out of India. I would say, hang on. Don't get swayed by seeing these clickbait things on Instagram saying, see, the charges in India are so heavy, the charges in US aren't so much, so you get better returns there. It's not simple as that, and it's not true. So I hope you have understood this by watching this video. Thanks for watching the video. Do like and comment below. Let me know if you enjoyed this video, what more I could talk about regarding this. And if this is something your friends or family would like, please do think of sharing this video with them so they can also watch and learn from this. Nothing else more. I'll see you tomorrow on another video. Thank you.
Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu. And these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.